morning from Nantucket Harbor again. So we had the uptrend day yesterday, pullback in the market confirmed to be over. So daily uptrend still intact. We closed back above that 244.5 area where we said that's kind of the spot to show buyers back in control. I noticed we are gapping right down to that level in the pre-market, which is fine. So here we are. So, and for those of you who remember, we archive not only the game plans and all the morning meetings. If you want to get better at buying market pullbacks, just watch the morning meetings from these, the last few days, just the opening 5 minutes where we talk about the SPYs and the big picture, because this pattern is one you should internalize. It's not that unusual. It's actually a microcosm of some of the bottoms we put in 2015 and 16 in the SPY 184 area, 185. A couple of times where we did it, kind of a test of the low, a flush through the low, and closed higher, and then we started to grind higher for the next couple of weeks. And so, all you're really observing is kind of buyers seeing areas where there was interest. We come into those areas again, they buy again. The selling runs out of. The sellers kind of run out. What we've seen in this market environment is on day one, you tend to have plenty of sellers, and then after that, you get a few more people to jump in, but we haven't seen that cascade of people jumping in quite some time, and you always have the dip buyers, and so once that momentum of sellers jumping on kind of dissipates, you get the reversal. Sometimes it's a slower curve, like this, and sometimes it's just a straight V, but that has been the case now for quite some time. High probability play, and that's why we focus after a big down day of trying to buy a pullback and a bounce. So we closed above the 244.50, 60 kind of area here. This is where the second leg started on the downtrend day. We're right there in the pre-market. So if I kind of look at yesterday, it's interesting. I guess the first move was an opening drive, then it was just meander, till around 11:30. Then we popped through the high, moved sideways again for another couple hours before putting in a final leg. A very, very slow grind higher, maintained this uptrend throughout the afternoon. So looking at it today, we have this, first spot is right here. We broke out to the morning highs yesterday. Right there at 244.50, basically. And then we broke out there. So we kind of moved into this right here in the pre-market. You can make an argument anywhere below 244.60. You'd look to buy into this congestion area. Risk 20 cents to see if we turn back up for a close in this area here again. If we start to hold below 244.40, then we're looking at kind of the 243.80 to 244.10 area where we spiked up on day one bounce and failed. IWM, let's take a look. I haven't looked at this yet. Okay, so it grinded up all day yesterday. I think we talked about 136, right? Is that kind of a spot? Yesterday's morning meeting. So we closed above that. We're gapping below now. If we pop on the open, I would look for a failure right there. Okay, some stuff in play here. Let's start with, do I really want to start with my TCI? Let's start with Lowe's, LOW. So we want to put this in context. So the Lowe's and Home Depot, what do you call these, home supply or home remodeling companies, home something. One of the themes for these guys is they've continued to just put out good earnings over the last few years as a lot of these retail. You know what? The retail that's been hurt the most by Amazon is really the department stores where they're not, they don't have a very specific category. I feel like there's people who specialize in one category, or maybe once one brand. Brands certainly can be distributed through Amazon, so they do better. But anyway, the story with these guys is they're doing well on this category, and that Amazon hasn't been able to impact them. Blah blah blah. So people are looking for any signs of, especially at hedge funds, looking for any signs of that story coming to an end. Just looking at the chart, I just outlined kind of a 2-year consolidation, mid 60s to high 70s, and a couple times it's moved above the high 70s. See this a little bit better, but the real support the last couple of years is in this area here, in the kind of the 68. Let's see what this is. 66 to 68 area, with one dip at the beginning of 2016 when the market melted. It went through it, but then on the retest, came back down to 66. So this morning it was gapping lower to below 71, actually, to kind of, let's say, the support area here. So this is a pullback from the beginning of the year, 71 to 70.50. And recently it actually pulled back to 72. Let's zoom in a little. So this gives us a decent picture. So right now it's actually bounced back up to above 72. So if I'm looking at this, to me, 70, kind of 73, 40 to 74 is the first real spot where, not knowing whether or not this is the beginning of going back to the 60s again, you got to be a little bit careful on the gap down on the short here. So this kind of area right here would be the spot where you would look. Unless, and I'm talking about right on the open, so let's zoom in. So numbers coming out, hasn't been above 78, 280. So really the way to look at this is, so now you're getting kind of the above and below 72 here. And ideally what you'd want to see is just a quick pop to here on the open, and then you get short, and it'd be like a lower high, and it would come down and test the pre-market low. And then you'd see, like, is it going to be like Foot Locker where it closes at the low and you hold a little short and you're ready to go for the next day, and so it's easy to capture the second down day in NFL, which I believe went down a couple more dollars the other day. And that's kind of why you're trying to get positioned in as strong a position as possible. But you might not get this bounce here. Maybe there's some real sellers and it just never even goes above here, and then you look for just it starting to hold below 72, and then you play it, and you play it, and then you play it for the down move from there. So you're going to have to kind of judge. It's a pretty liquid stock. It's let's see what it is. It's 6 million shares a day, so it's actually very liquid. We'll trade over 10 million shares today, and so you can give it a few shots. Or you're really trying to, you're trying to get $1 to $2 out of this, for the most part, at least on half your position. So you can risk a little bit. So right now it looks like it's trying to break to the upside from 72. Pre-market volume has been, wow, almost 1 million shares. So you're getting a lot of information here. So right now, I'm not sure if they're on a conference call. I don't actually have my trading platform open because my laptop tends to get a little bit crazy when I open too much stuff on it. So perhaps they're saying something positive. Or somebody can put in the chat. Actually, the conference call should be on the Let's see the time on the scanner. All right, let's move on to the next thing. ITCI. So ITCI, their drug isn't toxic. The pathway in animals is different than humans. That's really good news for them. It's gapping higher. Let's put this in context, though. Here's the daily. So the daily is, this was a $60 stock, then it was 25, then the bad news came out, it gapped down to 15. And even more recently, they gapped it down again. Now it's, with their drug not having toxicity, it looks like it's moving back inside of this prior range in the initial gap down, which was basically, let's call it 13 to 17. Okay, so here we are. So right now it looks okay. So topped out at 16, didn't even get to 17. It's tried to bounce, now it's holding below 15. So sellers are in control, and it has, normally it only trades 365,000 shares. It could trade 2 million shares today, perhaps. It's already traded 200,000 in the pre-market. So, and that's what you're watching right now, right? You gotta, do sellers maintain control? And if they do, we have, what do we have? 13 and then 11, 7 by 12. So I have first support area here and second area here. So giving people a chance to escape out with 20, 30% gains this morning. If sellers maintain control, these are the kind of the downside first support areas. If it comes off a little bit more and bases and kind of gets above, starts to reverse, then you can look for the move through the pre-market high all the way up to the 17 resistance on the daily. So it's going to be a little bit thinner, but as I said, could trade a couple million shares. And the spread should be pretty tight. It's a low price stock. The next one is PRTK. And PRTK, what was the news here? Oh yeah, they put themselves up for sale. So let's look at the daily just to put in context where somebody might be interested in buying them. Okay, so it was a $40 stock, went all the way down to 12. It's doubled off the lows, and this is pretty clear. So this kind of support area here from on the downtrend has now become resistance. In the low 20s, 22.5 to 25 area. It's gapping towards the top of that range right now. So in these situations, it's always, what are the analysts saying? Are the analysts saying it can get sold up here if they can? And you might get a move to the higher 20s, like somewhere a little bit above this daily resistance. Obviously, it's going to trade at a discount to the price where the analysts are saying they might get a bid. And this one also trades sub 1 million shares, normally 600,000, but it's almost on 500,000 in the pre-market. So we should see some pretty good volume here. This is a good picture on the 2 minutes. Eesh, that looks a little weird. That looks really weird too. So let's say, what did I put for support here? Not till 2022. Okay, so let's be a little bit careful right on the open if it starts to flush, because we don't have really any support until at least 22 probably, at least. Okay, that gives us a better picture. So they've been buying it here. All right, so they've been buying it in front of 2350. So the first thing I would just note is right on the open, if it gets below 23.50, be really careful with the long, because again, that's $1.50 from the kind of the first support level I put in the sheet, which is even below here. If it does a little bit of flush below that, and then you notice it rebidding 23.50 and holding, then you can think about a pop back up to pre-market resistance. We do have, yeah, I mean, that's the top of the range on the daily. So that is that. And then Cree, which is just a miserable company, has been getting hammered for the last few years. Here's the daily on this one. It's actually been consolidating just between 21, 22, and 28 to 30 area for the last few years after it just completely erased the up move from 2012 and 13. And then what did they got? Yeah, they lowered guidance today. So it's actually gapping below the multi-year low. Or I guess no, it's actually gapping right to the multi-year low, I should say. It's not below it. It's right here and here. So they guided down, but it didn't look crazy in terms of the down guidance, meaning there could potentially be some bounce potential. Yeah, let's look at it since the number came out. Okay, so the number comes out, goes to 21.50, that tries to bounce $1. Now it's below that. So I guess what we want to do is judge it against this, the after hours low here. So right now it's below the after hours. I'm sorry, the initial down move low. The after hours low was actually down here, which it's still below. It's tight. So our action points are, what did I put on the sheet? 22, 22 and a half. Okay, so that's kind of the, if it really gets strong, you can pop back up into this area where it failed in the after hours. Right there, 22 to 22.50. But we want to keep an eye on this 21 here where it just can't get back above. Now, if first moves up like something like this, and it comes in, it doesn't go below 21 again, then you can look for the move up into here. Any type of consolidation during the day below $21 that breaks to the downside, you want to be short. It's no man's land. So that's that. Second day and technicals, Momo. Oof, this closed so weak. Should look at the daily first. So I really thought this had a good chance of bouncing because it was down so much. I tried twice. We'll look at that in a second. So here's the daily. It's in this big uptrend. And you know, it was coming into this support area here around 36.5. And below that, the next thing is 35.5, I guess, to 35. Both bounces failed during the day. Maybe we'll get some closes around here for a couple of days, and then we'll get the move back up to 40. Let's see. We can see on the 5-minute one. So first move was down. The low was 37. It tried to bounce here, went up $1, 38. Hit a new low, 36.5. Tried to bounce, went up to 37.5. But it could never, you know, first time, second time, and it actually based higher here. But instead of breaking to the upside and continuing the reversal pattern, it broke to the downside and then held 37 the rest of the day, closed at the low. This morning, it's right above yesterday's low, so below yesterday's low. Look to see how much it goes down from there. I feel like in the mid 30s, 35, 36, it's a dangerous short. So you be careful there. Rather look for the play of it kind of basing down here. Eventually, if it gets back above 37.50, I'd be thinking about a larger up move to where the down move started from yesterday. DSW. So DSW, it looked pretty good in the morning on the long side in terms of it pulled back right on the open to 18.5. Then it started holding 1880, tried to curl up here, but failed to get above the morning high, and then started to roll, but then didn't break down, went to the morning low. Somebody bought it, some people bought it. Then it failed at 19. Remember, something fails to break to the upside, comes off, and then comes up to the whole number. We watch to see if it's sold there, but that's kind of the most common place where people will try to get short, especially if it's tight to the morning high. And then eventually it did roll over. Didn't quite get to $18. And buyers were there in front of 18, and they pushed it for a close right at 18.5. So it held a large gap. Even despite the fact that there was clearly sellers all morning above 19, then they stepped down a little bit. So it's kind of like a neutral. I mean, it's neutral. Like I said, that's why I put 1850 as inflection on the sheet, meaning if it's holding below 1850 and want to look to see if it rolls back down to 18 or even starts to fill the gap a little bit, that's fine. If it's holding above 1850, though, I would be more thinking about yesterday's highs and then even move closer to 20. So I'd be flexible on that. And then Toll Brothers, which the first move was down. So first move was down. We talked about what was the price, 36.70 or something like that, below 37. I said, don't think, think about buying it for a bounce if it gets below 37. They flush it down to 36.70. Went a little bit lower, and then reversed up. So that was a pretty good one. Short entry is not great. I mean, you can see it spiked right on the open to 38 there, but it was probably very hard to get a print. I mean, above 38 would have been a better spot for it to spike to. And then after the initial reversal, which if you weren't buying in here in the 70s, 80s, or on the reversal bar, probably had trouble. It pulled back to 37 and was bought there. Yeah, I mean, it was bought at 37. I'd be happy to play it on the long side again, like 30 into 36.80, or even a little nibble at 37. Then you want to see it start to hold above 37.40 for a move back up to 38, and then kind of see what's what. So that is it. I don't think we have any questions this morning. As always, be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.